So inflation, we talk about it all the time. We all expect prices in the US to keep rising. Inflation in the US has gone, tariffs in the US has caused inflation to go higher, but it never got as high, or at least not yet, as high as many people thought it would, which is quite interesting. Why aren't prices going higher? Why isn't inflation showing up at a higher rate? And that is quite interesting. And it's interesting because of who is covering the costs of these higher prices. When tariffs are put on goods coming into the US, who is swallowing the higher costs? And what we're finding is, in a lot of cases, it's the businesses themselves. They are swallowing a lot of those costs and passing on only a small percentage to the end user or the consumer. And this is quite interesting. Our first chart, actually, which is a great one, shows all the different tariff rates. And you can see here on the left side, Mexico, for example, share of US imports, 15.5%, but you have a tariff rate of 25%. You can see Canada's rate, our tariff rate, 35%, and so forth and so on. India, 50%, but the share of US imports, a small amount, only 2.7%. So here you have all the different tariff rates. And what the main takeaway is, look, if you had to get an average for all these countries, what would that average be? Well, our next chart shows what that average is. And that average falls in the vicinity of 15 to 20%. There you go. You can see the tariff rates, the average effective tariff rate since January 2025, and where it sits right now. It was obviously higher earlier in the year in April, but since the trade negotiations happened over the summer months, a lot of the tariff rates came down. And so now we see an effective rate somewhere around 18%. Keep in mind, look on the far left of this chart. Look where tariff rates were a year ago. It was something like 2.5%, 3%. And today, much, much higher. So what's going on with these tariffs? Well, as I said, if you're looking at a country that perhaps has a 15% tariff rate, what we're finding is that first 10% or so is being swallowed up by the companies. They're swallowing it. It's a hit, obviously, to margins. It's a hit to the bottom line, but they don't want to pass on that full cost to the consumer. Then with the last 5%, if it's a 15% tariff rate, that 5%, that is basically being shared by the business and the consumer. So maybe they'll pass along 2-3% and cover another 2%. So effectively, they might be covering 10 to 12% of the 15% tariff. That is the business. And maybe the consumer they're seeing their costs rise about 3%. And that's what we're sort of seeing. Our next chart that we have here, which is the company's reactions to the tariff by regions of the world. You can see here exactly what I'm saying. Withdraw or cut in guidance. So this is US companies that are saying, because of the tariffs, we can't tell you how much we're expected to make over the next 12 months. And you can see how many companies in the US are saying that. You can see how many companies are instituting price hikes, how many are having a financial hit to their bottom line, profit margin warnings, etc. So you can see what's happening in the US. It's also happening in the UK, emerging markets, Asia. But in the US themselves, the US is the ones that are putting on these tariffs, and yet they're the ones that are seeing the effects with respect to hits to the bottom line for their corporations. Our next chart actually shows by sector of the economy, and you can see here, automotive and transportation, withdraw or cut in guidance, 18. Financial hit, 14. The consumer, look at the consumer. They're being affected, obviously, not as much as they could be, and that we were fearful that it would have been. But for now, businesses seem to be swallowing up a fair bit of the higher costs. You can see healthcare and industrial manufacturing is another area that we're seeing businesses really, swallowing the costs of these tariffs. So if you're wondering now, okay, well, if businesses are swallowing the majority of the tariffs, how long can they do this for? Is there an offset for these higher costs on one side? Could they be cutting in another area? Well, as we have seen just, I guess, a segment or two ago with respect to hiring and jobs growth, that is the offset. And what we're finding is that businesses, they may not be firing individuals right now, but they're not hiring. So any business, especially if it's a big business, on average, you have a number of individuals retire at the end of the year. We know that the workforce in the United States and Canada and around the world is aging in most countries. India is probably one of the exceptions to that rule. So as people are retiring, we find that businesses are just not replacing them. So they're not necessarily letting go individuals, but they're not hiring. They're getting more efficient. They're asking people to do more than what they were doing in the past. And on top of all that, we also know that artificial intelligence is definitely helping businesses start to become more efficient. We're going to see AI play a bigger and bigger part in terms of efficiency and, unfortunately, perhaps a cut in employment going forward. So overall, what I believe you're going to see and continue to see are businesses and a cut in employment. And that's why I think, or that is what I think is offsetting the higher costs they're swallowing with the tariffs. We have a chart, U.S. job growth lower than expected in August. And you can see there it is, the red little dot there. We showed some information earlier. But yes, that goes along with what I'm saying. We are not seeing people being hired. Next chart shows exactly this. Fewer jobs than job seekers. There you have it. The unemployed are now catching up to the job openings. We get this number out of the US every month. It's called JOLTS, and it stands for job openings and labor turnover. And that JOLTS number is coming down seemingly on a regular basis now. And so job openings, unemployed, have now surpassed job seekers. There's not as many job openings as we would like. So overall, what we're seeing is that jobs are not being created, or job openings are coming down, and businesses are using that to offset swallowing a lot of the tariff costs and the higher costs. And we'll just have to see how long these businesses can maintain this sort of thing.